Hello and welcome. Budget 21-22 has been announced. The special Pandey head retail research ICICIdirect.
I'm hanging up the call now.
And welcome. Big takeaways from the budget this time.
Hi Gitu. I think budget has got all the ingredients for taking the economic size from under $3 trillion to $5 trillion. I think we were clearly expecting budget to be growth oriented, and which is what has come by. And I think one of the initial fears of the market was that this extra growth or this growth is going to be funded through additional levies and taxes and some cess and surcharges. But that has not happened, and what we've seen is that given the fact that interest rates are lower at this point in time and here to stay for some more longer period of time, we've seen an expansion in fiscal deficit to drive growth. And the focus of the budget is on clearly two areas. One of them is infrastructure, because infrastructure overall has a good multiplier effect on the economy. And so we have seen very broad-based overall allocation for a lot of key infrastructure segments or pockets. And then there is a bit of a custom duty tweaking for PLI, especially for the manufacturing sector. Both these segments have got a good potential in terms of creating skilled and unskilled jobs for the entire economy. And our sense is that with no negative surprises for the market, the budget is clearly a step in the right direction in terms of providing the much needed lift for the economic growth, given the fact that last year the growth was overall impacted because of COVID. So from that perspective, we are seeing that the markets are sort of cheering this budget, and rightly so. I think besides infrastructure and manufacturing, banking is another sector which is expected to sort of witness a big positive, and are already witnessing big positives. That banking overall is a good proxy for overall economic consumption. And all this infrastructure growth and manufacturing-led growth is going to translate into higher credit growth for banking as an entire pack. So banking is another big beneficiary of this. And I think the other key highlight of the budget is the asset monetization, which the government is going to undertake, especially in which I think with the kind of policy tweaking which is there in the budget, I think asset monetization is something which the government is going to clearly focus on, especially on something like roads, something like transmission networks, along with gas pipelines. So I think all these have potential to sort of raise good amount of money for the government for a sustainable capex side, because the government has already come out with a huge pipeline of nearly about 7,300 projects, totaling about 111 lakh crores to be spent over the next 4-5 years. So it's a very pro-growth budget and a much-needed lift which was required for markets currently.
FM this time seems to have bitten the bullet as far as the fiscal deficit is concerned. Fiscal deficit for the current fiscal has been pegged at 9.8%, and for the next fiscal it is 6.8%. The market see this, because markets are given a thumbs up as of now, and markets are roaring.
So we were expecting fiscal deficit to be slightly higher, but I think the budget for both FY21 and FY22, I think compared to our expectations, the fiscal deficit number is about closer to 200 or 2% higher. And and I think market is not really sort of minding this kind of a higher fiscal deficit. Like I said, given the fact that we see good amount of global liquidity panning out over the next 1 or 2 years till the time you see a broad-based overall economic recovery everywhere. Along with that, I think if the interest rate cycle is expected to be lower for a longer period of time. So if you're sort of borrowing extra at lower interest rate, I think market is not really going to sort of mind that kind of a spending. And I think whatever government has announced in the budget, I think you will find little fault in terms of what they've been doing or what they intend to do to sort of lift the economic growth. So I think even with extra borrowing, probably bond market might be slightly muted from that perspective. But I think equity markets are going to sort of cheer in a big way that infra and manufacturing will sort of provide the necessary lift for the economic growth.
New ARC and AMC to take over public sector bank bad debt. Is this something to do with the bad bank?
So finer details is what we'll have to look at, but I think they have provided about 20,000 odd crores again for recapitalization of PSU banks, and there's some mention of privatization of PSU banks. I think all this should be taken as big positive, given the fact that new entity will be able to sort of raise money more efficiently, and will lead to less volatility in economic growth, as highlighted in the economic survey. Because historically, we have seen that any kind of a stress in the banking system creates economic growth volatility, and which is what I think ideally it should not be doing. So if you're making the overall banking system or financial system more robust by better participation of players, I think that's a big positive from that perspective.
FDI insurance sector from 49% to 74% now. How do you see this?
So insurance and banking is one of the few sectors where we see good amount of foreign money participation, both FDI and FI inflows. And insurance as an overall sector has in India still got lower levels of penetration compared to global counterparts. So, and this sector is a sort of a sector which requires capital and has a long gestation period. So, if we get higher money inflows in this particular sector, I think it's a step in right direction. Because in the last 2-3 years, we have seen that the insurance as a sector has not really been sort of growing, largely because, say, for example, in life insurance sector, ULIP as a segment has been sort of been muted, and companies have been moving more towards efficient products. And I think, like I said, with more of capital required for a longer period of time, I think hiking the FDI limit in insurance is also a step in right direction, because you would need a good amount of foreign capital to sort of help or mitigate the economic volatility or the income volatility across asset classes, across investors.
Yeah, disinvestment target set at 1.75 lakh crore possible?
So disinvestment target last year was in excess of 2 lakh crore. We were also hoping of a similar kind of a number at 2.17. I think the number which came out as 1.75 lakh crores, slightly lower than what we expected. But I think the way the government has given pipeline for next 4 years for a number of segments, I think in finer details, our sense is that the government will sort of probably spell out more finer details in terms of what is the quantum of money they are looking to sort of spend. But I think the overall tone of the budget in terms of asset monetization, whether we talk of pipelines or whether we talk of roads, I think is a step in right direction, because these are core sectors which would need capital for sustainable capex. So I think if I take divestment plus asset monetization put together, I think the scope for disappointment is not there.
Scrappage policy, little bit touched in the budget, but it's coming now. It seems so. It will be announced soon. So how good is this for auto sector?
So I think whatever I could sort of pick in the speech was that voluntary sort of a scrappage policy for private vehicles over 20 years, and for public vehicles, I think over 15 years. I think that's slightly on a higher side. We were hoping that these numbers ideally should be lower. But I think we'll have to look at finer details. But I think scrappage as an overall policy is pretty positive. And I think the other big positive is that the government is not looking to promote ICE engines, which is sort of far more polluting. So from that perspective, I think CV as a segment benefits a lot, largely because with this kind of infrastructure or manufacturing push, I think commercial vehicle industry, whether it is medium and heavy commercial vehicles or LCVs, I think should find favor and should do relatively better than the rest of the pack.
How would you rate the budget, Pankaj, on the list of 10?
So I think if I have to sort of rate the overall budget, obviously one can have room for further expectation. But I think from what we expected, I think this is somewhere between 8 to 9 out of 10 from overall budget perspective.
Thank you, Pankaj, for being with us.